The internet giant Google, it was a bit of a moment for them because Google saw billions of dollars wiped off its market value. In fact, it was around $22 to $23 billion in 8 minutes. That was wiped off the company's value. But it's after its latest set of results were released early, 3.5 hours early, and all by accident. Now, the figures, which should have come out after the markets closed on Wall Street, well, those figures also revealed a 20% drop in profits, far worse than analysts had expected.
Google is blaming a printing blunder after its shares nosedived due to the early release of a disappointing earnings report. The details showing third-quarter profits fell 20% year-on-year were revealed 3 hours earlier than planned by the tech giant's financial printers. Figures for the July to September period came in well short of Wall Street's expectations at the equivalent of 1.67 billion euros. The company's shares fell 9% on the news and were suspended on the Nasdaq for 2 hours. One reason for the disappointing results is that click advertising revenues fallen.
As news of the week earnings report began to spread, Google shares began to drop dramatically, 9% in a matter of minutes. It was so bad, the company called Nasdaq and asked them to pull the plug on trading while Google finalized its report. The quarterly loss in income is blamed primarily on Google's acquisition of Motorola, a cell phone company with a treasure trove of intellectual property, but a weak bottom line.
It seems like maybe people forgot about the fact that Google let us know multiple times recently that they were taking a pretty significant restructuring charge associated with Motorola.
Analysts say the drop in earnings come as Google attempts to adapt to a world where more and more people access the internet on mobile devices. There, they make less money for clicks on advertisements.
They need a bigger presence in mobile because that's where the money's going. Unfortunately, we're in this weird position right now where it's still more profitable in their traditional business, even though that's slowly ceding to the mobile side.
After a nearly 3-hour break in trading, shares recovered slightly. Now the trick for Google will be keeping profits up as they transition to an increasingly mobile world.